Hey, are you wondering where mortgage rates are headed in 2025? Well, whether you're buying, selling, or refinancing, this information could save you thousands. So the mortgage market is constantly evolving, and 2025 is shaping up to be a year full of surprises. So in this video series, we're going to break down forecasts, economic factors, influencing rates, and what it all means for you. So whether you're a homeowner, an investor, or a first-time buyer, we're going to be discussing trends, potential interest rate changes, and the key signals to watch for to make sure that you are making the best financial decision. Staying informed now can put you in the best position when it's time to buy or sell, and there's some great information here.
Hey everyone, it's Chris from SEG, and I'm talking today with Jess Silva from Guaranteed Rate. We're going to explore a little bit of what is happening with mortgage rates and housing as we head into 2025. So, Jess, good morning. Thanks for joining. How are you?
Good morning, Chris. Thank you for having me. Appreciate it.
Absolutely. So, Jess, I think the question I'm hearing from buyers the most is what to expect in 2025. So, high level from your perspective as a loan officer, what are you seeing and what do you think are the important things for potential home buyers to know as they head into the start of the year?
Yeah, no, absolutely. So, I think the first and foremost that's on everybody's mind is what's going to happen with rates. And, am I going to be in a better position later on in the year than I am now? The reality is if I had a crystal ball, I'd be in probably a way different position. But, the interest rate market is really a factor of the economy and economic factors, right? So you have to take a look at inflation, jobs reports, GDP, a lot of those things. And while, 2023, we saw rampant inflation, we have definitely come back down in 24, but we still don't have a really great grasp on it, right? We actually saw numbers come out today with better than expected inflation. But looking at today's MBS, which is the mortgage-backed securities, which sort of help determine where rates are, we haven't seen that much of a pullback, right? But overall, when you take a look at rates, they're pretty much the same as they were in 2024 at this point last year. What is different is home prices, right? That appreciation in real estate. And so what we can expect is, maybe 2 rate cuts between now and the end of the year of 2025. And, if we continue to get better than expected inflation numbers like we did today, we can see rates start to pull back, hopefully back into the mid to low 6s, right? But right now we have to take a look and really see what the trajectory is of the other economic factors. So I think that overall we're probably going to be seeing rates stagnant, in the high 6s for at least the first half of 2024, but that does give us opportunities to look at some other products, which, a lot of people have started to get more invested into ARMs, depending on what your price points are. So I think that, we're going to see a lot of really what we saw in 2024 through 2025.
So let me ask you, because I think you were mentioning before the different indicators that can impact mortgage rates, and we're hearing things like inflation is improving. I think towards the end of the year, it was definitely in the news that the Fed had made a rate cut, but mortgage rates seem to either be unaffected or go up. So can you just explain to everyone that's sort of scratching their head wondering why, like, it sounds like some things are getting better, but then rates go up? What causes that?
Yeah, I actually can't tell you. As soon as the news came out in October that the Fed was cutting rate by 50 basis points, I immediately had calls for all of my locked loans. Hey, I'd like to reduce my rate by 0.5%, right? I wish that was the case. But, unfortunately, the Fed funds rate isn't an indice for mortgage rates. Really, the 10-year Treasury is what the indice is for mortgage rates, right? That's sort of what tracks it. So the Fed funds rate really controls stuff like HELOC, car payments, credit card bills, right? So it's sort of those shorter term lending rate, right? And so when you look at mortgage rates, right, that's jobs reports, GDP, inflation, right? So they're not tied together, right? The Fed reducing the Fed funds rate, right, so long as it's in line with expectations, right, really shouldn't have that much of an impact on mortgage rates, right? What happens is when it deviates from the plan, right, like in October, we were expecting 25 basis points. Fed came out with a 50 basis point cut. We immediately, within a week, saw a significant rate increase, right? So, I always try to educate my clients on, different resources that they can utilize to sort of use as a barometer. And one of the things that I always direct my clients to is mortgagenewsdaily.com. It's a really great resource. It tells you what's happening in the mortgage market. It has a survey of every bank's 30-year fixed rate. Right. But, so everybody says, oh, well, the rate on there is higher than what you're quoting, right? That's a survey of every bank in the country, right? So, that it's important to understand that a lot of the resources that clients see out there, even headlines that come out via Yahoo and Google, unfortunately, a lot of that stuff is delayed, right? So people will send me stuff and be like, oh, I heard rates drop. And it's like, well, they dropped when that article, when the data points for that article were being retrieved, but we're in a different market today, right? The same thing that, your rate changes as the market unless your loan is locked.
Thanks for watching. I want to make sure that you feel confident and understand how choosing the right home, the best mortgage, and a great team of professionals is really the key that you need to win in today's real estate market. So be sure to watch more of our videos for expert tips, or schedule a free strategy session with an agent on our team to get started exploring the best plan for you today. Talk to you soon.